I'm very excited to have our four expert panelists who are here to discuss how they're using digital and data-first solutions to address the small business financing gap. Three of our panelists, Boost Technology, Boost Capital, and Open Contract Partnerships, are Strive Community Innovation Fund winners. As I was saying, Strive Community is a philanthropic initiative of the Mastercard Centre of Inclusive Growth in Caribou Digital, and we are working and supporting 5 million small businesses globally to survive and grow by going digital. So before we get into the discussion, let me just introduce our panelists. So first of all, we have Koye Oyinka, who is co-founder and chief commercial officer of Boost Nigeria. Active across Ghana, South Africa, and Nigeria, Senegal, and soon testing out in Paraguay as well. Boost is a B2B commerce platform digitizing the retail space from manufacturers to small and medium retailers, making ordering, stock and payment, record keeping, and analytics much easier for everyone, particularly the end retailers. They're also helping small businesses grow their businesses through stock loans. We also have Lindsay Marcheselt, Director of Data and Engagement at Open Contracting Partnership. Open Contracting Partnership is a silo-busting collaboration across governments, businesses, civil society, and technologists that aims to open up and transform public procurement to deliver fairer and better results for everyone. Using open data and an open government approach, they seamlessly connect small businesses which have been awarded government contracts with financial institutions that can offer them credit. We also have Lucinda Revel, co-founder of Boost Capital. Boost Capital has created the tech to offer microloans through smartphones, making it easier and cheaper. In their pilot market, Cambodia, Boost has already engaged with over 300,000 customers, enabled over $3 million in loans, and provided free financial education to over 4,000 micro-entrepreneurs. And lastly, we have Susie Ferreira, founder and CEO of Dini. Dini is a pioneer in embedded lending infrastructure that enables digital platforms to offer B2B credit and payment products in Latin America. Dini believes in an informed use of credit and offers products that encourage small businesses to use credit in a responsible way, offering resources to help boost their business and maintain their company's financial health without being tied to high interest rates or long-term debt. I'm going to start by asking the panelists a range of questions on how they're innovating around access to finance for small businesses. We'll have time for Q&A at the end, so please feel free to post any questions into the chat during our discussion. So to kickstart the discussion, I am going to ask each of the panelists if in 60 seconds they can tell us about their most innovative digital finance products or most innovative approach to extending access to digital finance for small businesses. And if you could tell me also why you're proud of it. And I'm going to start with Koye, and I will be timing 60 seconds.
Hello, everyone. I'm Koye. Thank you so much for the opportunity to speak to you. So we use Stock Boost, which is an embedded working capital product that we make available to our retailers, giving them access to expand their businesses without the anxiety of money owed. We did a pilot with 40 retailers in September, offering a 3% interest one-month product. We had 100% repayment. We began offering our retailers stock credit of 1.5 times their monthly order value, and it resulted in 12.5% increase in their profit. From working in our other markets like Ghana, we see that Ghana has been doing this for over a year. We see that retailers have an estimated elasticity of 2.5x their usual value. And we calculate that if we push Stock Boost to double their current capacity, we can increase the retailer's take home by 50%. In addition to the obvious increase in the revenue, which we're extremely proud of, 40% of the women we trialed with had never taken a loan facility before. But the clarity of a stock loan tied to historical purchases was something that was very attractive to them and very easy for them to accept. Did I make it in 60 seconds?
That's perfect. Thank you. Now, Lucinda, over to you.
Thanks. For the last 18 months, Boost has been piloting a digital financial product that was quite unprecedented in our market, Cambodia, a loan that could be applied for digitally with no collateral required to secure the loan at a below market interest rate, specifically for female entrepreneurs. And no banks were offering small business loans because the operating expense for the bank to assess the income of a small business made that loan uneconomical. So what we did is we developed a chatbot to interview entrepreneurs about their businesses. We were replacing this sort of like high OpEx manual assessment with a low cost tech solution. And we're proud of it because it truly made financing available to a segment that was previously excluded. And we did it in a way that was actually providing a better service than if it were an offline option. It's available anytime from anywhere. There's no barrier to entry. It doesn't require an app download. It doesn't require sophisticated tech capabilities. If you can chat, you can apply.
Excellent, thank you, Lucinda. Lindsay, could you give us 60 seconds on open contract partnership?
Sure, thank you. So as a nonprofit organization, we've put out a variety of openly licensed tools over the years aimed at improving the way that government does business with the private sector to make it more fair and more effective. And our flagship product is the Open Contracting Data Standard. And what we're most proud of is how it's been used by government, civil society, and private sector in more than 30 countries around the world to achieve measurable improvements in transparency, efficiency, and effectiveness of public procurement. I'll include one example. Colombia implemented the OCDS and developed tools to analyze the data to understand the performance of the procurement system. And as a result of data-driven reforms, they've achieved a 6% decrease in direct contracts, so more competition, a 17% increase in the average number of bidders, so more newcomers coming to the public procurement market, and a 17% increase in the average, and a significant increase also in expanding the supplier diversity so that more small businesses and women-led businesses are also benefiting.
Excellent. I think you've all been practicing the 60 seconds. Lastly, Susie.
Hello. So when we set up Genie, the vision was how can we transform access to credit as the similar way that we access electricity and water. So that's the beginning of how we thought about our product, right? In one tap, you can access credit instantly. So then we thought if this is an infrastructure play, let's build the infrastructure as opposed to focusing on the product itself. So the idea of Genie was, let's build this infrastructure that we plug in. It's an end-to-end credit infrastructure that we plug in digital ecosystems like marketplaces, e-commerce platforms. And then we are able to allow SMBs to access credit at point of need, where they are relevant to their business journeys. Why I'm proud of that is because now SMBs don't need to go to a bank and beg for a loan. And actually they don't even need to apply for a loan. They're able to experience financial products invisibly within their journeys. What we have done here is to utilize data and also capital flows to make it more accessible, cheaper, frictionless. And that has put the bargaining power in the hands of SMBs as opposed to banks. And that's why we're proud of it.
Great, thank you everyone. I'm now going to ask some more detailed questions to each of the panelists. So Lindsay, we'd love to learn a bit more about the work that you're doing. So obviously open data plays a really significant role in your work. Can you speak a bit more about how you're leveraging open data to link small businesses to access to finance?
Thank you so much, Annabelle. So procurement market around the world is humongous. It's estimated to be around $13 trillion per year globally, and that's just national level buying. So that's the governments every year buying the goods, works, and services that are intended to kind of deliver sustainable development and economic prosperity. And so we believe that procurement is one of the most promising untapped solutions to create economic opportunity. But unfortunately, small and women-led businesses face huge barriers in accessing this market due to inequities and the existing power structures. So in the United States, for example, women own nearly 40% of small businesses, but win less than 5% of federal government contracts. In Colombia, 91% of all businesses have less than 10 employees, and 78% of SMEs have never held a government contract. So we believe there's, huge opportunity here. And one of the biggest barriers that they face is access to finance, because companies are often asked to provide guarantees or to withstand big delays in receiving payment. So access to finance is essential to enable small businesses to access public procurement. And because more than 30 governments around the world are now using the open contracting data standard to publish open data about public procurement opportunities and contracts, we believe that this information can be used by financial institutions and SMEs to streamline the approval of access to credit and expand access to public procurement markets by small and women-led businesses. And so we're currently developing this service enabled by software that will use the open data to help award this access to credit. And we're working to design and pilot this new product with partners from government, financial institutions, and small business associations in the city of Bogota over the next year.
Great. Look forward to hearing more about the results of that pilot. Koye, I would like to hear more about the work you're doing with Boost Technology. So in Nigeria, you're offering your service to a network of female retail entrepreneurs. Obviously, you discussed a bit about the challenges that women-led small businesses and women entrepreneurs have in terms of accessing credit and services. Could you speak a bit more about why women-led businesses are often more credit constrained than their male-led counterparts, and the work that you're doing around designing and delivering digital solutions with women in mind?
Thank you, Annabelle. Let me share briefly what we have tried successfully in Nigeria and what we're doing. We're working with the Unilever Shakti program. Shakti means power in India. It was an empowerment program started by Unilever to go into semi-urban and rural areas to work with women and empower them. It was the key part of this was understanding that women lack access to working capital financing. So this was to bridge that gap. In Nigeria, we started with giving the women roughly $80 worth of products to join the program, and they had 6 months to pay back with a 10% interest. In reality, the money is simply rolled over to help the women establish themselves as businesses. And we saw many over the years go from street tabletop shops to mini supermarkets over time. In that program, we found a 96% repayment rate. And if it also served as a good screen for us to understand the women that were truly interested in growing a business, pretty much all of them. We didn't have historical records for these women at that stage, but we did find that women are involved in traditional financial schemes. For example, there's something we call AJO in Southwest Nigeria. It's a collective savings and lending system. These systems create informal structures of trust capital, which are understood within these communities. And they point us to the need for why a digital approach is necessary. And by digital, I mean utilizing a field team in addition to digital assets. Currently, we're working with 8,000 women across semi-urban and rural Nigeria. And in this instance, we ensured we recruited the field team from the same communities as the women. This means we're able to maximize the existing trust capitals that have been established in these communities with these women. And all the digital innovation that we're coming up with, we can trial it with these 250 field team members, correcting for geophysical and cultural discrepancies before mass rolling it out to the 8,000 women. It also means when we bring in a new product, whether it's financial or digital adjustment, the women have a lot more confidence in trying it out because it is introduced by one of their own. Another key aspect of why we found taking a digital approach is we've realized the women have different capacities for financial and digital literacy, growth, and understanding. And what we are trying to do over time is to work to build retailer segmentation of cohorts in which we can now better match each woman to what tools would best help her at the stage of her own financial and digital journey. So for example, if we segment this 8,000 women into 4 cohorts, we can say cohort A needs something as basic as just being in a WhatsApp group and being sent reminders of out-of-stock products, financial benefits they could have, discounts and things like that. Meanwhile, all the way in cohort D, these women still need to be visited physically twice a week or more to make them, to enable them participate fully in the financial journey. So we're finding that if we remember that women are not a single retailer segment, then we can best tailor products and services that will meet them at their individual journeys and help them be involved in financial inclusion. With this system, this sort of systems in place, we are able to target 8,000 women in a very specific way. In the trial we said we did in September with 40 women, we saw a combined 55% growth versus previous month and 47% growth versus their 3-month average for the women. And this was with 100% repayment within the 1 month. So it shows that if you can find where the women are in their individual stage of their financial journey, then and you can tailor your products to address them. They are one of the best customers in terms of being involved in financial products and taking loans and repaying it.
Great, thanks, Chloe. A lot of what you were saying in terms of responding to needs, making sure that you are kind of integrating the credit offering at relevant times really kind of relates to the work that you're doing, Susie, with Dini in terms of developing an embedded financing offering. Could you talk a bit more about the work that you're doing to reach the microbusiness segment in Latin America through embedded finance?
Sure. So what attracted us was obviously all this data that is generated within large ecosystems, right? So we plug into places like e-commerce platforms, marketplaces. We're looking at ERPs. So any digital ecosystem that companies are already integrated, they're almost like the operating system of SMBs. Some of them, the SMBs are able to sell their products, manage their logistics, invest in marketing, and so on. So of course, you're looking at data, highly relevant credit risk data. You're looking at revenue data, pricing, customer rating. And this is one of the pillars, right? Being able to see the data and then have predictability of how the business is going to perform in the next few months based on the previous historical data. But the second pillar of that is also the capital that is flowing, right? So if you're selling products within these platforms, then obviously you're going to be receiving your repayments within those platforms. So again, by plugging in there exactly where the business is happening, we're also able to collect repayments directly from those cash flows, just from a product perspective, right? So in one side, we are bringing the infrastructure and plugging in those ecosystems. But on the other side, on top of it, we're plugging in highly innovative products for SMBs. Again, the concept of a digital credit wallet was our first product. Remembering, it was all about one tap, instant access. So this product is more like an open use. So if SMBs have like an emergency need for capital, or if they need to pay for their like employees and so on, it's a very general way of using the credit. And what we're basically saying is you can tap in, access credit at the point of need when you need, but every time they utilize the loan, we're going to make it installment that is very much adjusted to their sales cycle within those platforms. So it's going to be 3, 6, 9 months installment depending on the business. So effectively enabling them to pay for anything installments. That becomes obviously much more affordable for SMBs. And on the other side, we also give them a dashboard where they know how much they have already borrowed, how much that costs for them. And I think the idea here was, how can we, business overdrafts, right? They are very useful because they are convenient, they are point of need. However, you kind of lose track of how much you're spending. And also interest rates has like some sort of snowball effect. In our case, there is repayment of both principal and interest on a monthly basis. So we never allow SMBs to get over indebted. So this is one of the products. The second product, which we really love, it's when we attach this digital credit account at point of purchase or point of sale. So let's say there is a marketplace where SMBs are buying from the industry, perhaps a little bit like Boost in that sense, where we are this method of payment installments, buy now, pay later for businesses, because when they are going to buy the inventory, they can click pay with Genie. And by the way, I've been talking to some of your guys on with the Boost guys, potentially a partnership there. And the idea being, you know, the marketplace is already helping them within the logistics and the inventory, but why not also help them with the financial services behind that, right? That's where we come in with a buy now, pay later for businesses. This is very interesting for us because it's all about understanding the supply chain, optimizing the supply chain. So this enables us to reduce the cost. So you give the SMB a way to pay upfront, but also get the savings from paying upfront the supplier.
Great, thanks, Susie. It's really interesting to hear about how you're all using different types of data and innovating around the use of data to kind of break down these barriers to access to finance. Lucinda, it would be great to hear from you in terms of how the work that you're doing in terms of providing small businesses access to financial services and learning, so training opportunities through the smartphone. Can you explain a bit more about the role that training can play in expanding access to finance and breaking down those barriers?
Sure. So I'm going to speak from the point of view of bankers. Like, banks' biggest fear in lending to an entrepreneur is the potential inconsistency of the income stream from their business, and that affects the entrepreneur's ability to repay. So training for entrepreneurs on things like cash flow management, inventory management, pricing planning, those can help address that banker's worry about the ability to repay. But then banks are also always wanting to maximize the probability to repay. So if we can provide more indicators about the likelihood to repay, we can help there. So when we provide our digital financial training, we're measuring things like an A to F grade, consumption, timing, progress, and other markers that can help banks have a sort of a fuller picture of an entrepreneur's probability to repay. So the training can help banks feel more confident in both an entrepreneur's ability and probability to repay a loan, which is what makes the bank feel comfortable with extending finance to a small business.
Excellent, thank you. I'm going to ask two questions to each of the panelists. So starting with Susie and Lucinda. So Susie, starting with you. I'd like to hear from you what advice you would give to other providers who are designing digital financial products for small businesses.
Yes, I think one thing that really drove our design approach was to understand this supply chain, right? Understand where it's not just about focusing on the product itself, but how does that product plays a role in the ecosystem around these SMBs. So thinking about how do they sell, right? They need to sell the products in the marketplace. So what can I build that will help with that sale? So it's less about just giving them credit and thinking, how can I optimize the way they sell? How can I make it more digital? How can I make it faster? How I can enable them to pay installments and increase affordability, potentially reduce costs for them or giving them some savings. So yes, just think about the whole ecosystem around them and the supply chain around it and try to optimize around that. Another thing is obviously follow the data, right? What we're doing is effectively, money is basically data. So if you're following the data, that will be very much like similar to what I said in terms of being like looking at the whole supply chain, right? Because you're going to see what data from where and be able to use that data to reduce costs, to make them more frictionless and so on. And lastly, I think that was it. The supply chain, follow the data, and also don't focus on the product, right? Focus on the journey of the SMBs.
Great, thank you. Lucinda, what advice would you give to other providers?
I'd say if you're designing a digital financial product, like as your starting point, do not expect every small entrepreneur in an emerging market to keep perfect accounting using Peachtree and be able to provide a balance sheet with like a P&L to the bank. You really have to design your products in a way that incorporates the informality of many small businesses. So like at Boost, we built a chatbot interview to assess small business income as part of a loan application, where, for example, we ask the entrepreneur first, what's the time frame in which you think about your revenue? Is it daily? Is it weekly? Is it monthly? And then all of our questions are phrased in the context of that time frame. And then our algorithms translate their answers into a monthly P&L that a bank requires to approve a loan. So like it's our role as the technology creator to bridge the divide between how the entrepreneur operates and what the bank needs. And that should be really built into the thinking of any company who's providing digital financial services for small businesses.
Great, thank you, Lucinda. I really like that in terms of making sure that you really understand the needs and the capabilities of the small businesses and help bridge that gap between the financial service providers. Thinking more broadly about the wider stakeholders in the ecosystem, I would like to hear from you, Lindsay and Koye, about what opportunities and challenges do you face with other stakeholders in the ecosystem, so policy, regulation, platform, etc. Lindsay, should we start with you?
All right, thanks so much, Annabelle. So, when we're talking about these types of, projects and reforms, there are really three areas where there's opportunities and challenges, and that's policy, people, and technology. And in a lot of ways, technologies where the opportunities and challenges are a little bit more straightforward. When it comes to the policy and regulatory landscape, that can provide both opportunities and challenges. And so, for example, through our project in Colombia, we're identifying policy and regulatory barriers, in which there are, requirements that are kind of built into the regulations that govern public procurement processes. And so some of these barriers our new tool will help to address. So we're looking at how can we use technology and people-centric approaches to kind of deal with those regulatory barriers, but other barriers will require a policy or regulatory change. And so that's why we'll be making recommendations to the city of Bogota and the National Procurement Authority of Colombia so that they can be addressed systematically. Let's take the barrier down rather than trying to find, a hack around it. And then the second major area of opportunities and challenges is in human behavior. So achieving transformational impact requires collaboration and people working together to change behaviors. And so that's why, the new processes, solutions, and technologies need to be user-led and multi-stakeholder. So we're bringing together people from government, financial institutions, and SME associations, to the table together to design this in a way that they feel is going to work for them as the main users of this service. And so that's kind of key to our approach.
Great, thank you, Lindsay. And Koye, you obviously work across the retail chain, helping to digitize both ends, the small businesses and the suppliers. Can you speak about what opportunities and challenges you face with the various stakeholders in your ecosystem?
Yeah, there's an African proverb that says, if you want to go quickly, go alone. If you want to go far, go together. The biggest challenge is ensuring that we are abiding by all the principles of our partners while keeping our entrepreneurial drive to innovate and iterate quickly in the field. But this also presents lots of opportunities for us because each partner is pretty much specialized and has a comparative advantage in what they're already doing. And we can now maximize that to push the business as quickly as possible. For example, Growing Businesses Foundation is the implementing partner whose field, they're the field team that interact daily with the women. Recently, we needed 275 of the 8,000 women for a study. We had a selection criteria that pretty much our digital capacity could only address 2 of that. We had 6 parameters that we wanted this to be captured in selecting these women. We used the field team, we gave them the extra 4 criteria and asked them to do it for the segmentation. And after this, we did a survey just to ensure that the women they picked was exactly what we wanted. And the segmentation they gave us was perfect. It was perfectly aligned to all the criteria we had used. This was something we could not do by ourselves because we just did not have the insight into this women to be able to do this already. So the hope is currently, as we are using the comparative advantages and the knowledge and insight of our partners, who have spent years cultivating relationships and understanding with these women, over time, we can learn what I guess what we'll call the secret sauce that each of these different partners used to interact with these women, and then find a way to help them digitize it, because that is the big, that's our comparative advantage in the relationship.
Okay, thank you, Koi. And I know there'll be lots of people in the audience listening from the donor space. It'd be great kind of having discussed the challenges and opportunities that you face in your various different businesses. It'd be great to hear from each of you what role you think donors can play in addressing access to finance challenges for small businesses. Susie, can I start with you?
Sure. So, well, by building these new sort of models, right, like plugging in marketplaces, thinking about different types of data, different types of ways of serving SMBs, there's this huge upfront cost as a startup, right, that you're bringing a new product to market and you're doing things that nobody ever did, and doing the things that banks have been neglecting so far, particularly certain types of small businesses where there's very little data available. So perhaps one way that we could partner with donors is how could we potentially use actual direct investment in testing, you know, like, because in this first 2 to 3 years, there is a ton of testing taking place. You obviously have your normal portfolio, like with good credit quality, because you have to have those track records to then be able to raise more debt financing and obviously grow your book. But you should be, as a startup, you should be having tons of different testing portfolios if you are to build models that will really include, you know, because if you're just taking into account the best credit quality with credit bureau ratings of X and Y, the acceptable levels, then you're not really innovating. So how could donors help us build test portfolios with direct investments? So this is one of the ways. And in the same sort of thinking of risk sharing, and one of the challenges that we have as lenders, we have to set up a securitization structure, right? Usually you have a subordinated quota of 10 to 20%. Again, as a startup, that's extremely expensive. So what if we could partner with donors where they would actually take risk on this sort of subordinated quota? And that could actually open up so much opportunity for new lenders out there as well, because right now we need to commit our own equity into the subordinated quota, highly expensive, and also we don't have enough equity because we're always fundraising on the equity side, but we need that for the operation of the business. So what if you could actually risk participate, putting the equity into the portfolio, or potentially guaranteeing, like having some sort of guarantee structures as well. So there is no other way to make real impact than actually put the money where your mouth is, sort of thing. And this is something that I keep, trying the industry to really think of. It's a direct investment, not only us as the innovators, right? But we need the rest of the industry to actually come in and take a little bit of the risk together with us if we are to change the world.
Thanks, Susie. Lucinda, would love to hear your thoughts, either adding to what else can be done in risk sharing or sharing another thought in terms of how donors can help in this space.
Yeah, very much aligned with what Susie was saying. It would be great if more donors can offer guarantorships for lenders. I talked earlier about a loan product for female entrepreneurs, and those are unsecured loans. And the reason they're unsecured is because it's a huge barrier to entry to finance for a small business owner to have to put up collateral for loan. So when we wanted to start offering these loans, we had no data on if they were going to be super high risk. It was something the market was not offering this. And so the only way that we could actually start the project without taking on a huge amount of risk for ourselves was that USAID, through a program run by PACT, guaranteed defaults. So that allowed us to offer the loans to a totally new and very, previously totally excluded type of borrower. I would note, however, that we voluntarily suggested that it would not be 100% guarantee. And that's because when the bank has nothing riding on the loan, they can, and they historically have, made overly risky lending decisions. But when you have a very well-designed guarantorship, that sort of lets a responsible lender offer financing to a previously underserved customer, then that's really the definition of a high impact donor intervention, because it's advantageous for the customer who can finally access finance when they couldn't before. It's advantageous for the bank, which can experiment with a new product. And it's advantageous for the donor, who the donor can set aside a relatively small fund for a guarantee. And in doing so, they actually unlock like 10 times that funding amount in loans from the banking partner. And for these female entrepreneur loans specifically that we were doing, our results have been so good that we want to expand the pilot if we can line up another guarantee.
Excellent. Yeah, definitely two very similar thoughts in terms of how donors can share the risk. Koye, would be interested to hear your thoughts.
Yes, I'm aligned with everyone, but I also believe there are currently some positives that we are seeing in the space. I believe donors play a huge role in bridging the gap between short-term necessity and long-term ambition. The holy grail for retail digitization is to have 100% financially and digitally literate and independent self-ordering retailers. However, in the short term, the priority is to ensure all orders and payments are digitally captured so we can source financing for these women, expand their businesses, and grow revenue. There's usually a disconnect between those two. Donors help us break that tension. Currently, with Strive, in addition to the great job of connecting us with other people in this space and rubbing minds with them, we are getting some funding to test self-ordering and to push the idea of, because our view is currently the way the system is built, most of the data is used to help the manufacturers and the distributors in the space. But we feel that if we can find a way to reorganize this information and deliver it to the retailers in a bite-sized way, in an easily accessible, understandable method, they'll be more inclined to self-order themselves and take control of their own financial and digital space and capacity. Currently, we are able to experiment on this with our partnership with Strive. So I do feel donors are playing a huge role in helping us bridge what it is we truly want, while ensuring we are addressing what it is that is needed in the market currently.
Great, thanks, Koye. So we have kind of helping to share the risk, helping to test and experiment with innovations. Lastly, Lindsay, would love to hear from you in terms of how you think donors could help in your line of work.
Well, firstly, thank you to everything that the donors who are participating on the call today are already doing in this space. But the things that, of course, echoing everything that my wonderful esteemed panelists have already said, a couple other thoughts occurred to me. One is obviously, from where I'm coming from, very passionate about raising awareness and lifting up the role of public procurement as a potentially transformational instrument to empower small businesses and historically underrepresented groups. So as donors with their influential roles can be kind of lifting up this issue and calling for more attention to be put and reforms to be put in place to make these processes more fair, more transparent, more engaging with diverse business communities. That can be very, very helpful. Likewise, as my other panelists suggested, supporting innovation, supporting innovative collaboration, really also using your convening power, to bring ideas, people, and institutions together. As Koye also mentioned, so sorry for repeating people, but I prepared notes in advance. And then of course, you can fund mission-driven nonprofit organizations, like OCP or our partners, to support country reforms and the development of global public knowledge products to help solve these most pressing problems that are facing our society. And I think the role of nonprofits in this space is really important. The role of civil society voices in this space is really important. And for example, we would not be able to be piloting this new tool in Colombia without the support of the Strive community. Yes, thank you for the question, Annabelle.
Great, thanks, Lindsay. I think we can now move to some questions from the audience. Koye, I am going to start with you. There's a question from Rafi from CARE, and she's asking, are you using WhatsApp in Nigeria as well for the stock ordering platform?
So we're doing it in parallel. We have something called direct ordering, which is when the retailers themselves use WhatsApp to order their products. And we ensured we have a very easy to interact with, very data-light process that pretty much for 4 kg will last you for a whole year for the women. However, we understand that there's still some training that needs to go on to help everyone understand how easy self-ordering can be, how best to manage the data on their phone, because that's often the biggest barrier for some of them, and also getting access to just the right technology for some of the women. So in addition to the women being able to purchase directly over WhatsApp, we also have something called indirect ordering, which is working with the GBF field team to help the women be able to make their orders still digitally and ensure everything is recorded, whether or not they have access to WhatsApp or not. But WhatsApp is our primary tool for interacting directly with the women. And the hope is going forward, particularly like I was saying with the Strive brand, we will be able to share bite-sized data and promotions and other informations with them directly over WhatsApp.
Great, thank you, Koye. Lucinda, there is a question from you, again from Rafi. She's asking, what screening questions do you use to establish the right target during the application process? And what is the biggest drop-off moment during the application process?
Great question. So our principle has been that actually a lot of microfinance has worked well in terms of figuring out ability to repay. Our job is to digitize a lot of that. So we've taken a lot of an existing microfinance loan application, we've made it in chat, but we've also been able to strip out questions that aren't relevant to make it a lot shorter. So for instance, if you go into a bank and you have to fill in an application, they're going to ask you about your spouse, even if you're not married. Whereas in chat, we can ask someone's marital status and then not ask a question about the spouse if they're single. And we also, for instance, we never ask someone's name because we know that we're going to, as part of the credit bureau check, scan their ID card and we can pull their name off the ID card. So try and make it more customer centric, more like the customer joy higher by really making just the most concise application you can. The second question was about drop-off rate. We find actually this business versus salary income is a huge deal in emerging markets because a lot of banks only want to process loans for people who have salary. People who have business and collateral, they'll do it because it's a big loan. It makes sense for them economically, but a small loan for somebody who has business income, that's where you see drop off. So the reason that we started doing these kinds of loans is because we found with one of our partners, a third of applicants were being dropped off because there was no loan product for them. They didn't have collateral, they had business income. So sort of plugging that gap is a great way to expand the market for the bank and also expand accessibility to financing to people who weren't getting it before.
Susan, you're really interesting. Susie, there's a question for you. Daniel was asking, where are the funds that are being lent to the entrepreneurs coming from?
Cool. So in Brazil, credit markets are like private credit markets are extremely mature. So there's the concept of these things called FIDICs. They are credit funds. And like basically they're asset managers that put together these credit funds, and what you have behind are private wealth individuals investing in these funds. So for Genie, we partner with the asset managers. We plug in on the back end of our infrastructure, right? So on the top end, we have the demand, all the platforms, and on the back, we have obviously the capital providers. These funds, the FIDICs, usually have this structure where there is a subordinated that requires us, obviously the lenders, to participate with 10 to 20% on the securitization structure. And then they have obviously either a mezzanine or a senior debt providers that are coming in, obviously taking less risk. And that's why I said it's quite expensive for us, because if you have to put 20% for the portfolio, always having to raise more and more equity to be able to finance the loans. So yeah, you're just going to over dilute yourself, because if you're a pure software business, right, you're fundraising, you get your equity and you build your operation. If you're a lender, you're putting all of that into the portfolio. It just doesn't scale really nicely. So right now, that's what we're doing. We have the 2080, but recently, Gini has been able to strike a deal with one of the asset managers in Brazil for a whole new securitization structure, where we don't put anything, no equities, 100% advance rate. But there is a bit of a problem with that. In one side, obviously, makes us completely asset light, and now we really can focus our equity into the operations. But the problem here is now we're putting the decision-making power a lot more in the hands of the asset manager. They are taking 100% of the risk. Therefore, they're going to be very strict on who you can underwrite. If they're going to be very strict, that means a lot of companies that we're going to be leaving behind, particularly, you know, the SMBs that will have like poorer scoring and so on. So for us, this has unlocked our growth potential because we don't participate with equity, but on the other side has hindered our ability to serve, you know, a lot of SMBs that before we could serve because we took that risk. And that is where I say the guarantor sort of scheme or actual investment in the subordinated quota, that could be very helpful. But in short, it's securitization structure, work with the capital markets in Brazil. Eventually, when we get a bit bigger and we have crazy big plans of having a banking license, things are going to be different. We're going to be the masters of our own world, but it takes time to get there.
Thanks, Susie. Koya, another question for you. How do you deal with regulatory and license requirements around lending in Nigeria?
So this is an interesting question. And this is also part of, I guess, the benefits of working with partnerships. We're working with two partners who have been in the space for a while. And so we can clearly lean on their existing structures to ensure nothing we're doing is new, we're just digitizing and formalizing. So GBF has been in the space for a while and they've been giving loans to these women in collaboration with Unilever. So we're just going to keep working with GBF to ensure we stay within the regulatory frameworks that they have established with the authorities to move forward. So I guess this is one of those spaces where working together actually moves you faster as well as going further. Great.
And whilst we wait, in case there are any more questions from the audience, another question from me. Lucinda, I'd love to hear from you in terms of how you think about consumer protection, in terms of product design and consumer trust. Obviously, you deliver training. It'd be interesting if you cover any of that in your training or how you think about it more broadly.
Consumer retention, is that what it was?
Protection.
Yeah. Right. So it's interesting because in a lot of emerging markets, the concepts of like privacy aren't actually as advanced as they are in developed markets. And so we actually find ourselves being far more protective of the consumer's privacy and rights than the consumer themselves actually demands. But we think that that's important because that's where the market is going. And so, for instance, like when we are asking customers, do you want to share your financial education consumption with a bank in order to get better services from that bank? It has to be voluntary on the part of the customer. It has to be their willingness to share. But as part of that, you also have to explain what the benefit is. You know, you have to be able to say, if you share your data, there should be a clear benefit. It shouldn't be a process in which there's no voluntary sharing, and it shouldn't be a process in which the customer doesn't benefit from it.
Susie and Koya, you're shaking your heads. Anything you'd like to add on the consumer protection question?
I wasn't going to add. Oh, sorry.
No, go.
I wasn't going to talk about customer protection. I was going to talk about the data. And I found it interesting. She mentioned the use of data, because part of what we are trying to change is we find consumer data is not often used to benefit the consumer themselves. It's used to benefit the manufacturers and the distributors. And we really want to change that narrative. And we feel if we can find a way for customers to connect with their own data, to take a hold of it and see it and understand it, we will see a lot more rapid growth of SMEs, and we'll see a lot more involvement in financial inclusion products. And yeah, I think the SME space will grow a lot more if we can find a way to share the consumer data with the consumer themselves, and show them the best way to maximize it to grow their businesses.
Yeah, I was thinking like the broader vision for us is how do we, again, we want to shift the bargaining power, right, from banks, from financial institutions to the hands of SMBs. So like we see that the data obviously right now serves a purpose internally for us to underwrite, to give them access that otherwise they wouldn't have, to reduce the cost. But it would be really nice if we could start exposing that data, right? Exposing how we look at them, who they are, like from a credit perspective, right? And what they can do to change that, and just maybe training and driving behaviors, like gamifying how they can improve that. And then allow them to use that data later on to buy products and be able, almost like the data becoming a digital currency, right? But yeah, this is very much from a vision perspective, and that's what we would love to get to, right? Really empower them with the data, allowing them to directly monetize that data, change that data, and use it for their benefit.
Great, fantastic. I think that's all the questions that we have for today. I'd just like to say thank you to all the panelists for your insights and expertise. Oh, before I say thank you, I've got one more question. Sorry, that's just come in. So I'll hold that. This is actually a question for everyone. So whoever feels like they would like to answer this. So it's a follow-up question on the idea of testing portfolios. Diana would love to hear from speakers, what would their ideal testing portfolio be, especially in terms of women SME profiles?
I can answer that one. I think that ideally, it's very market dependent, because the size of a loan in a different market is a big loan or a small loan. So for instance, in Cambodia, a small business loan could be between $100 and $500. In another market, like in Indonesia, it's going to be slightly larger than that. So you have to calibrate it to the actual market. But I would say what you would consider for that market, a small business loan over a relatively short duration. And the reason for the short duration is because it allows you to learn very rapidly. If you're lending for 60 months and you're lending a lot of money, it has a high impact in the fact that the company can do a lot with it, but it also means that it's high risk for the company, and it also takes you a really long time to figure out if it's a good loan or a bad loan and be able to make performance analysis on it.
Anyone else like to add on that?
I think from a very simple approach, right? One of the things that right now we have a little bit of this obstacle is around this minimum requirement, like the eligibility criteria that the funds are willing to fund the portfolio. So if we could just have a testing portfolio, and actually we love women as borrowers. We're a company that was founded by 2 women, and that was by design, because we wanted our products to speak the language of women. Before it was meant to be just for women, but I realized it had to be for everyone. But now the product really speaks to women. Almost 40% of our customers are women entrepreneurs. So if there was to be like this opportunity to really go into like the women's side of things, if we could just reduce this, improve the reduce the barriers of the eligibility criteria and really focus on the revenues that are generated in the platform and follow how that revenue increases, and without having to take into account the very traditional criteria. That would be really helpful, right? Really focus on how much they're selling, what sort of penetration they have, like in digital sort of system, in digital like Instagram, or really look at alternative data as opposed to traditional data, and be able to underwrite those outside of the eligibility criteria.
Great, thank you. I think that was our last question. So as I was saying, thank you to everyone on the panel for your great insights and expertise. It's been great to hear about the barriers that you are breaking down from addressing kind of the constraints women-led businesses face, looking at MSCs trying to win government contracts, looking at the lack of trust or the failure that some of these financing options have in terms of addressing real needs, and then obviously your responses to them in terms of open data, alternative data, accounting for nuances in terms of women-led small businesses, making sure that providers don't think about MSCs as a monolithic unit, but really deliver and design products based on needs and deliver it and meet small businesses where they are. And obviously also great to hear about your thoughts around how the donor community can help in terms of risk sharing, in terms of helping to kind of test and experiment, work as a convening power, etc. So I think lots of really great insights and lessons, and want to say thanks to the audience. And in terms of Strive community, I just encourage everyone to check out our website, www.strivecommunity.org, where you can learn more about the work that our innovation fund winners and more are doing. Thank you, everyone.
Thank you.